Vietnam is one of the world's fastest growing economies, with a young and dynamic population of close to 100 million people and a strategic location in the vibrant heart of Asia. After 3 decades of high growth, Vietnam's GDP has recently passed $3,000 per capita. This is 3 times the level in 2002, when discretionary expenditure first started to rise, and is the inflection point in a consumer society. The opportunities for investment are immense. There are over 1,500 public companies across 3 stock exchanges, and many times more the number of private companies. To select and screen the right opportunities, we need an experienced Vietnamese team on the ground, which Dynam Capital has. We are an active ESG investor. Companies that can improve their ESG will over time get better rated and higher valuations. We are a patient investor and recognize that for many companies, ESG is a journey, and we can help and assist them on that journey as an engaged and active investor. We are Dynam Capital, and we welcome you to Vietnam Holding.
Well, a very good morning or good afternoon to all of you. I'm Craig Martin, and I'm chairman of Dynam Capital, and it's a great pleasure to welcome you all to our second webinar. Dynam Capital is a Guernsey-regulated fund manager and the manager of Vietnam Holding, which is a closed-end fund listed on the London Stock Exchange. We manage a concentrated portfolio of Vietnamese securities with a strong focus on ESG, and the fund has been a signatory of the United Nations Principles for Responsible Investing for over a decade. Our investment themes are industrialization, consumer, and urbanization, and these really fall out of the strong macro position in Vietnam. In May, during our first webinar, we asked the question, can Vietnam be a post-pandemic winner? And so we thought after 2 months we should revisit this and look at the post-pandemic realities. How is the recovery in Vietnam looking, particularly given a week in which we have seen some new COVID infections? Are there any new themes that the portfolio is taking on board? And does ESG really matter in times like this? We'll also illustrate some of our thinking with reference to one or two of our portfolio companies. Your microphones and cameras will be off during the course of the webinar. Hopefully ours will stay on. Do let us know if that's not the case. And at the end of the webinar, there'll be a time for Q&A. You can find the Q&A box at the bottom of the screen on your computer, or perhaps on the top on your phones. To put your questions in the Q&A box, and if you put something in chat, just say hello or let us know if something's not working. As a manager, we like to think that we're nimble and focused, and so we hope to keep this webinar, including the Q&A, around 30 minutes or more. We recognize everyone's busy, lots of competing webinars and Zoom calls, so hopefully we can cover all the ground in that time. I'm joined again today by my colleagues Tin, my co-managing director, and also Tan, and you'll be hearing from them very shortly. Six months ago, COVID wasn't on anyone's radar, and 3 months ago, we all thought the virus could be quickly contained. In early March, we asked the question through Twitter, has COVID changed your plans or activities for this weekend? This was on the 8th of March. And almost 90% of people at the time didn't think it would have any impact on their weekend plans. And just less than a week after that, we asked the same question, by which time it had been declared a pandemic. And the Twitter responses were, 54% thought that it would indeed now have some impact on their weekend. Of course, since then, the COVID virus is now all consuming, and many major economies are continuing to face unchecked outbreaks. And those countries like Vietnam, which are very successful in squashing and flattening the curve and doing their bit, are also discovering that the world is still very interconnected. And perhaps no one really will win and recover until everyone does. Globally, we're in the worst peacetime growth since the 1930s. Global capacity has shrunk, and global GDP is probably contracted by about 3%. 10 days ago, we asked a question about travel, when people thought they might travel again. And rather worryingly, perhaps, more than 2/3 didn't expect to be flying until next year. So goodness knows what we're going to do with all our accumulated air miles. We spoke in May at our last webinar at some length on Vietnam's strong and cohesive efforts to contain COVID. And the country went for 99 days without any community spread cases. And it was just at the weekend in Da Nang and then in Hanoi and Ho Chi Minh City this week that there've been a couple more cases. There are a number of imported cases. And if you land in Vietnam, you'll go into quarantine for 14 days. And there are about 80,000 people in quarantine. But remarkably, there have been less than 500 infections in Vietnam since the beginning of the outbreak of COVID, and still no deaths. And let's hope that continues. So Vietnam's early efforts to contain and come out of the first waves of COVID have really helped its domestic economy open up, seen a strong increase in domestic activity, and up until a couple of days ago, full domestic mobility. But this is a nasty virus, isn't it? And it's highly infectious, and the recurrences that we're seeing across Australasia, many parts of Asia, in North America, and also Europe, are clearly going to have some kind of more longer term impact on global consumer sentiment. And although Vietnam is not immune to this, many economists are looking at Vietnam still as a rare market of growth. And the base case is a 3% GDP increase this year. The government are looking at 4%, and there are some optimists still there looking at slightly higher than that. The response by the Vietnamese government has been encouraging on a number of dimensions, not only in the credible joined up way in which they dealt with COVID. The government is now looking to get out of some of the things it shouldn't be in. So by that, it's looking at continuing and reinvigorating the privatization process and looking to sell off stakes in companies that are listed, that it already has a stake in. And the government's trying to get into more of the things that the government should normally be in, mobilizing domestic expenditure in infrastructure, for example, and also creating some frameworks to manage the risk for foreign investors in infrastructure projects. They just passed a new PPP or public-private partnership law. So to consider the shape of the trajectory that Vietnam is on, I'll hand over to my colleague, Tan.
Thank you, Craig. Is the recovery of Vietnam a V-shaped recovery? Is it the big question? Even though is it still soon to conclude that is it a clear V-shape or not? However, we are seeing that the recovery of Vietnam is really strong. Yeah, the GDP of Vietnam in the first half of 2020 achieved nearly 2% compared to the negative growth in many other countries. And even in Q2, the worst impact by the pandemic, Vietnam still achieved 0.4%, very encouraging. And this is partly helped by the very strong macro condition coming into 2020. and also because of the early escape from the lockdown in April of Vietnam. As for the manufacturing sector, the key growth driver of Vietnam, it also recovered strongly in June after the fall of more than 5% in the first half of the year. It is showing the resilience and the competitive advantages of Vietnam in this sector. And despite all the uncertainties in many other parts of the world, we continue to see that in the second half should be good for Vietnam. The retail sector, the domestic consumption also recovered strongly in June after falling down significantly in April during the month of lockdown. In the second half, the outlook should be brighter when the lockdown already easing, and the domestic consumption will be supported by the recovery of the domestic tourism sectors. Even though we still think that the some sectors that rely on international tourism will continue to suffer. The FDI, very interesting sector. As you know that in 2019, Vietnam hit the record level of FDI disbursement of more than 20 billion US dollar. And we continue to see the trend. Even in the first half, when there are implementation difficulties, Vietnam still achieve and the FDI still disbursed a considerable amount of FDI investment. In June, we see the strong recovery of disbursement of more than 2 billion US dollar. Even though some major national project in Vietnam get delayed because of the COVID-19. However, we still believe that the government still have many other areas to push the public investment in the second half of the year. In the first half of the year, right after the lockdown, the government already accelerated to disburse public investment, and they targeted to double the disbursement in 2020, which can be further help the economy to recover after the COVID-19. For the export sectors of Vietnam, the export of Vietnam to many markets already recover strongly, especially for very important markets like the US, China, even in the very difficult time of the COVID-19. It is showing that the more important role of Vietnam in the global supply chain, and it can replace China and many other competitors in the global supply chain, in the global trade market. As for the currency of Vietnam, the Vietnam Đồng, very interesting, and actually is still it's in line with our expectation. The currency has been very stable, the most stable currency in the regions for the last 5 years, and even year to date. And this is because of the increasing trade surplus of Vietnam. Just want to update you. Just yesterday, the officials just released that just announced that the trade surplus of Vietnam already hit 6.5 billion US dollar because of the recovery of the export. And we continue to think that the trend will continue because of the FDI inflows and also the increasing trade surplus. Not to say that the remittances to Vietnam still a sizable number, and this year, even though can go down about 30%, but it is still a very sizable number, nearly 10 billion US dollar. So given those the recovery of the macro, so what is the how the equity market react to that? The performance of the Vietnam equity market is quite very in line with other markets in the world, developed world, and also emerging markets. At the end of March, foreign investors rushed to sell in record numbers, and this drove down the market to a very low number, low level. And then the domestic investors jump in and to drive the rally of the market in May and June. Just for your information, more than 100,000 new investors already jumped in this period of time. Compared to other market, even though we have the Vietnam market performed quite in line, but it still have a lot of opportunities for the long term, given the back of the strong fundamentals and the macroeconomic improvement of Vietnam expected after the COVID-19. And now I would like to hand over to Mr. Thinh to talk more about the Vietnam holding portfolio, how it can be the proxy for the Vietnam market.
Our long-term investor and our investment theme of industrialization, urbanization, and domestic consumption are the major driving forces for our country to grow in the next year, as well as the next 20 years. Our commitment to environmental, social, and government is also intact. This year, we are taking a look at how we can map the activities of our company to Sustainable Development Goals of the United Nations. There are fairly comprehensive set of 17 ambitions for the world to achieve by 2030. So quite tall order. But we think our portfolio company can do more in these areas. And as investors, we will enjoy the benefit from those actions. Over the last decade, I spent a lot of time talking about good corporate governance and ESG with Vietnamese companies. One thing is certain. Companies are more aware of the issue than before. And in our experience, companies that work better at ESG are more open to new ideas, more responsive to the changes, and better on risk management. So what about the new normal of Vietnam and the post-pandemic reality? Let me illustrate a few developments and how we have positioned our portfolio to take advantage of them. The first trend is the digitalization. All over the world, COVID had brought about the need for faster and deeper digitalization. The fact that we do our meeting today over Zoom is one example of that. During the 3-week lockdown in April, we were grateful for some of these tools and we could continue our business without missing any single trading days. But our business is simple. For many companies in Vietnam and overseas, digital transformation is costly, difficult, and disruptive task. There is an urgent need for modernization of banks and companies in Vietnam. Data transfer and data storage are increasingly important, and with more data, we will require more bandwidth, more apps, and more platform. And of course, we need more software engineers. Our top holding FPT has really stood out during this period. Not only does it have one of the largest training facilities for software engineers, it also provides resilient backbone telecommunications for corporates and broadband for SME and retail customers. It is also a significant player in the digital transformation for global companies. FPT was one of the first company to hold a fully digital AGM and has been enabling other leading Vietnamese companies to do the same. So luckily that we have a good position in FPT in our portfolio. Another company called Vietnam Post, a leading package delivery company in Vietnam, we have been building a position in the last 12 months. As the e-commerce is booming in Vietnam, Vietnam Post has a great growth future. and we expect the company will grow more than 20% this year. And one of our investees, perhaps that is well known for you also, that's the Mobile One. They are a large omni-channel retailer, and not only is the largest physical retailer by number of stores, but also the largest e-commerce business in Vietnam, where their online revenue also increased significantly during the social distancing periods. The second chance is a multiplier effect from the infrastructure development and foreign direct investment. As Thanh and Craig have both mentioned, Vietnam stands to gain from the multiplier effect of increased investment in infrastructure. The country has an ambitious plan to double the level of public investment, funded in part by privatization and private public partnerships. One of the problems in the run-up for the financial crisis in a decade ago was the underinvestment in infrastructure, creating bottlenecks. We see signs that government is serious about investing in infrastructure, including highway, ports, and bridges. It bodes well for Hoa Phat, one of our portfolio companies, which is fully integrated steel manufacturer with economies of scale and low production cost. We expect the company earnings to grow more than 25% this year, and have increased our position in the company during the market downturn. We think Vietnam has strong chance to win business from global manufacturers looking to relocate from China, described as China Plus One. I don't think this is anything new, but this more than acceleration of existing trends. This manufacturer need industrial land and integrated industrial facilities. So we newly added Phuoc Hoa Rubber to our portfolio as a company is transforming its agricultural land, historically used for rubber plantation, into industrial park to meet the anticipated demand of those foreign manufacturers. In addition to that, we also added Vinhome this year, a business into which KKR recently invested more than $600 million alongside with Singaporean Temasek. Vinhome is a national developer of large-scale residential real estate projects, but now moved to build industrial park for companies also. The company would be a big player not only in the residential in real estate, but also in the industrial segment in the next few years. The third chance is domestic-led economic recovery. Vietnam is in good position of having growth economy this year. One of a very limited number of economy that is not contracting. It is being driven largely by domestic recovery story. And we think some of the better managed banks in Vietnam will benefit from this growth. As such, we have increased our exposure to bank sector, buying some of the better name when the market shown up. We also believe that affordable and mid-end real estate products will be benefit from the easing policies. Then we keep our position in Khang Dien Housing, which is well positioned for launching for new real estate projects. So that snapshot of our portfolio. Our approach is to be engaged with the portfolio companies and help them on the journey for better reporting, better governance, and better environmental practices. We think our portfolio is well positioned for the continued recovery from the second half of 2020 and is valued at around about 9 times of earnings. With that, I would hand back to Craig. Thank you.
Well, thank you very much, Tin and Tan. We have a chance to take some questions. There's a macro question here. The US, the Fed, printing lots of money, injecting trillions of dollars into the economy, unprecedented actions. What do we think, if anything, this will have an impact on the Vietnam economy? Tan, do you want to talk to that?
Yeah, I think the cheap funding can go to emerging market, including Vietnam. And maybe there's concern that, like in the past crisis, there will make volatility in the capital market because it'll be in and out of the capital very quickly. However, we think that this time Vietnam can benefit, given that Vietnam is more ready to receive like big funding for, and Vietnam have better infrastructure and better position to receive more money. So I think that's good for Vietnam.
Okay, there's a question. Obviously, international flights are still largely empty. People are going into quarantine if they land in Vietnam. There's a question around domestic flights. How's the domestic tourism industry post lockdown? Tan, again, do you want to talk to that?
Yeah, very interesting that domestic tourism will quickly rebound in the last 2 months. Not because the people will get back to normal, but also because of the support from the government. And and we think that the domestic tourism can be resilient in the second quarter, in the second half of the year. Yeah, okay. Before international can come into Vietnam.
There's a question: which sectors, if any, might benefit from a move away from China? I'll have a go at that, this is part of this China plus one. As Tin said, this is not something new, it's a continuation of a trend. So, over the last 30 years, we've seen a changing mix of manufacturing in Vietnam from very basic, low value add furniture and in the 90s through to much more advanced technologies. So we've seen a lot more of the nimble manufacturers already relocate more to Vietnam. Samsung's been here for many years, Apple and its subcontractors. So I think the key trend, the very interesting trend, will be if Vietnam could build these clusters of excellence for assembling electronics and other light type of products, it has a longer term impact and a benefit. So we're seeing a lot more manufacturers looking to relocate some or all of their activity out of China, and Vietnam's going to gain a lot of that. And we've also seen some Japanese government subsidy to help its manufacturers, its SMEs and manufacturers move from China to Southeast Asia. And Vietnam has strong affinity to Japan around that. There's a question around how do we feel about the fund's discount to net asset value? Obviously, somewhat limited in what we can talk to about that with the manager of the portfolio. I think it's interesting to see, though, that the discounts to net asset value have narrowed. The fund's units trade at a discount to net asset value. And the other thing we like to highlight to people is that within the portfolio, many of our stocks actually would have an implicit foreign premium should we wish to sell them. But we don't mark them at the premium, we mark them at the market price. So in addition to there being a discount to the net asset value, you can see that there's possible uplift in value as well from the interest of other investors into our holdings. It's a question on the portfolio. We focus on the consumer industrialization and urbanization. Have we assessed how robust these sectors might be if there's more of a prolonged global crisis? Tin, you said that you thought the portfolio was reasonably well positioned. Do you want to talk a little bit to that?
Yes. We anticipate the impact from the crisis in the beginning of the year and also during the COVID-19 times in Vietnam. First of all, that we have anticipate that the exporting sectors that will definitely will be affected. And the second one is that the retainer sectors also affected by the social distancing and also that the other measure to control the virus. So we did some action on that. We rebalancing our portfolio by reducing our exposure. Even we still like the retail sector, but we need to reduce them a little bit to reduce our risk. And also at the moment that in our portfolio we have no oil and gas, no garment textile. So that's the action that we did during the last time. At the moment that we increase our position in the industrial parks company, and also that logistic, and we also reduce some position in logistic, in especially the air cargo, but increase our position in the e-commerce logistic. So that's some activities that we did in the last few months.
Thanks, Tin. On e-commerce, we have a question. Do you see opportunities for Vietnamese companies in the international market? Is there a Vietnamese TikTok out there? I think it's interesting. It's quite hard for Vietnamese companies actually to go outside of Vietnam. They need special approval to do so. There are a few that have done that. Some of the oil companies, some of the telecommunications companies. And actually Viettel Post, our last mile delivery business, is also a market leader in Cambodia and Vietnam and Myanmar, in addition to its home market in Vietnam. So a few of these companies can. At the moment, none of the large kind of unicorns in Vietnam, the homegrown unicorns in Vietnam, really have ventured much out of Vietnam, given those restrictions. They're attracting a lot of attention from international partners. It's a large 100 million people in the economy, population, and that burgeoning consumer. So there's a lot of adoption of e-commerce in Vietnam, some of the kind of digitalization trends that Tin spoke to. And there's some fantastic companies of scale in Vietnam in various parts of that e-commerce mix, but none of those are international unicorns yet. We've seen more of the international unicorns want to come to Vietnam to take advantage of the attractive consumer market. Question around leverage, and question, do you think in our portfolio, how leveraged typically are our companies? Have they been aggressive? And will companies take advantage, perhaps lower interest rates to expand? So Tin, perhaps you would talk to that.
I mean, in the Q1 of the year that we did a very serious test on the leverage level of our portfolio. And I think the result is pretty okay, that a number of companies, our portfolio that have very low leverage. Some companies even have the negative leverage. That means that they have more cash than they borrow. Then we also that we see that one of our top holding, that the Hòa Phát, they also have a big loan from banks and bond also. And however, that the level of the leverage is still very acceptable. I mean that they also this year that their cash flow and their income also increase significantly. So we see that still okay for hold that position. Most of other positions that very good in the level of the leverage.
Yeah, just for just update, provide you with some numbers. The leverage of our portfolio is 0.9, including the bank. The financial is high. So by nature, and also the utility sector is high by nature, but actually it's well below 0.8 for the rest of the portfolio.
Okay. I'm conscious of time. There are a couple more questions come in. We'll make sure we reply to all those. There's a couple of questions there around Trump and China and EU and Vietnam. The positives, EU and Vietnam, a good bilateral agreement has been put in place. Perhaps the UK will also enter into one towards the end of this year. China versus the US, I think last year it provided opportunities for Vietnam. That trade war did perhaps intensify manufacturers looking at Vietnam. And I think, as Tin and Tan have both said, during this year that those trends seem to be accelerating. Now, obviously, we don't know what's going to happen in November in the US and what's going to happen in the political games. But Vietnam, I think, will continue its strong path. It has a strong domestic market, as well as being, a very integrated, open economy. I'd like to draw perhaps some concluding remarks. Clearly, we do remain in a very delicate place geopolitically in the global economy. Challenges and threats none of us have seen. There's no playbook for COVID-19. I think Vietnam's done a remarkable job, and we hope it can continue to do so as it tackles a few more infections this last week. We think potentially US dollar seems as if it could be having some pressure and could weaken, and EM currencies might strengthen. And as Tan said, the dong seems stable. It could even strengthen this year. Vietnam's domestic economy may continue to benefit from decisive government and credible handling of the pandemic. And Vietnam could continue to be this beneficiary from this China plus one strategy as we're in a fickle period of trade. So if Vietnam isn't part of your diversified portfolio already and you haven't put everything in gold, do encourage you to take a look. Look at www.vietnamholding.com for more information on the fund. Sign up if you're interested for our monthly fact sheet. Reach out to us on LinkedIn or Twitter. We do love to hear from you. We will answer everyone. We're very engaged. This is all we do. And we're very focused on it. So feel free to get in touch. And with that, I'd really like to thank you all for your time.